We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to look at the SPY ETF and where we are with our thinking of demand and supply. The SPY ETF has ETF volume, which is a little bit different from standard volume, but we're going to have to use what we've got. First, I'm going to draw the demand trend line. Two major points in the trend since 2009. And as we can see here, this point here, this COVID crisis sell-off, was the first time that the demand line was broken. That's an important point because it wasn't broken there, and it hasn't been broken since there. So that makes this point here critical. We'll just click that. These are our first two critical points. This is definitely climactic action down here, and because it was an event, we can't really call that a buying climax, but it is peak buying. And as you can see, these 2 points here, and these points here, those are points of preliminary supply. That basically means we've had a long trend up with green on the screen, and when you've got green on the screen, you know, a large green profit, eventually you want to start taking supply as you realise that it's time to bring some cash to the table. And this is what these are. These are supply points here. Supply has accumulated up something, an event happened here. As you can see, the volume's very, very low down here. Eventually something was going to happen, and we had a COVID smash here. But what we end up getting is our lower range, and a higher range. Or we can obviously draw some points here, but in a sense it's 340 to 220 on the SPY maximum trading ranges. Now what's important about that, it's a wide range, and distribution is associated with a wide range. Now it doesn't mean we're going to have to watch and see how this reacts down here, but we are following the Wyckoff pattern of distribution, because that's our first understanding. Here we have our channel which we've gone up, our BC, we're going to call that our BC, even though it's not climactic. A strong sell-off, automatic reaction down there, breaks the demand line, and we've got our secondary test up here. That's our secondary test. Okay, what's important to note is that typical phase A, this is phase A around here, and this phase A refers to as a strong break in momentum. And you really have to signify it by the fact that the demand line was broken, which is true. Big reversal volume down the below there. Wider spread, we've got plenty of that. Secondary test, that's up here, the red dot, and obviously the higher volatility. And now we're entering into a period of between demand and supply battle. So we're going to get a lot of volatility in the phase B area. That means you get wide spread and narrow spread as the bulls and the bears fight it out between the ranges. Obviously people are nervous about this, and there'll be some more supply coming into market to balance the books up. And we know the Fed's down here, someone pumping it up, but as you notice here, the Fed balance sheets start to shrink up here, so they're not going to buy it up to new highs. So we're going to have to watch for a test reaction. We might get another test of the high. So phase B is pretty much the volatility phase, and before we because phase B, where people are working their book to balance it up for the current events. So if they think COVID is going to get worse, they're going to reduce some stock float, and for those who don't think it's going to get worse, they're going to accumulate. So eventually we're going to have a battle between demand and supply. So for the next probably 6 to 9 months, especially before the elections, we're going to have a troubled time, and we have to pretty much be very careful and stand aside and let the markets do its thing. Because at the moment we have a strong point of supply and a strong point of demand, and we are definitely in a trading range and in a most volatile time, which requires the Wyckoff understanding investor to let the markets do its thing and to come back to the market when we know who's in charge. Thanks for watching.